Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. So I found a very important article talking about the similarities between the third and fourth quarter of 2008 and quarter one of 2020 in the silver futures market. And we know that in 2008 the credit crisis happened to lead to $50 silver in 2011. So could the similarities lead to the same price gains in the future? Do we see silver hitting $50 in the future? That's what this article is going to be talking about. So silver is extremely bullish in the 5-year term. Some people speculating $100+, and it's looking like if history repeats itself, then we're going to be there. It's just a matter of if you're patient or not, or if you're patient enough to wait it out. Right now, things may seem bearish, but in the 5-year time span, silver is extremely bullish. So I hope you enjoy this video. Make sure to smash the like button. Let's see if this video can get 150 likes. Anyways, let's jump into it. At the end of last week, the price of silver was sitting around $15.80 per ounce level on the active month July futures contract COMEX. Meanwhile, gold was just below $1,720 per ounce. To say that silver has underperformed gold over the past month would be an understatement. Silver can be a sleepy metal for long periods. It can also awaken and become a bullish beast or a roaring bear. We get a taste of that bear march when the risk-off conditions across all asset classes pushed the price of silver to $11.74 per ounce, the lowest price since 2009. Gold moved lower while silver was tanking, but the price only reached a low of $1,450, which was not even close to the level which it would have jeopardized the bullish trend in the yellow metal. So silver hit extremely low multi-year lows, while gold did drop, but not anywhere near as much as silver did. And gold recovered, and silver didn't really recover the rate that gold did. Silver has been frustrating for investors and traders looking for the precious metal to play catch-up with action in the gold market. Meanwhile, there are some significant similarities in the silver market when compared to its price moves during the last time a crisis hit markets back in 2008. The selling in silver back led to a rally that took the price to a high of $49.82 per ounce in 2011. So a bearish reversal on the quarterly chart. Silver is a frustrating metal for investors and traders looking for precious metals to follow in gold's bullish footsteps. Meanwhile, a look at price history could add some perspective to the price action over the past weeks. The quarterly chart shows that during the third quarter of 2008, amid the beginning of the global financial crisis, silver put on a bearish reversal. The price traded to a high of $19.37 above the peak in the second quarter of 2008 and $18.77 per ounce. Silver then closed the quarter at $12.15 below the $15.99 level or low from the previous quarter. In the first quarter of 2020, almost 12 years later, silver put in the same bearish price pattern as it rose to a high of $18.92 in the fourth quarter of 2019, a peak of $18.35, and settled at $14.15, below the low from the final 3 months of last year at $16.46 per ounce. In both cases, silver responded to risk-off conditions in 2008 and 2020 with a significant price spike to the downside. A spike lower from around the same price level. In 2008 and 2020, the silver headed from around the $19 per ounce level. In 2008, the price traded at a low of $8.40 in the fourth quarter. So far, the 2020 low has been $11.74. So do you see the similarities? In 2008, stimulus measures were unprecedented as the Fed lowered short-term rates to zero and unleashed quantitative easing program that put a cap on interest rates further out along the yield curve. In 2020, the Fed funds rate moved from the same low, but the amount of monetary policy stimulus and government fiscal programs have been far higher. From July through September 2008, the U.S. Treasury borrowed a record $530 billion. Last week, the Treasury told the markets it would borrow over 5 times that amount, nearly $3 trillion from the fund stimulus packages. The spike lower in 2008 and 2020 from around the same price in the silver market. So you could see that there's very, very close similarities. It's just we're on a much larger scale. So if we're talking about $50 silver in 2011 with those situations, those instances, those circumstances, now the same things are happening, but just much more extreme levels. Then expect silver to get to more extreme highs as well. A nosedive in the open interest metric and the ratio near highs. As the price of silver tanked in 2008 and 2020, the total number of long and short positions on the COMEX futures markets declined substantially. Silver tends to attract lots of speculative activity, and market participants headed for the sidelines during each challenging period as they close risk positions. The quarterly chart illustrates that open interest metrics fell from highs of 152 contracts in late 2017 and 85,923 contracts in the first quarter of 2008, a drop of 43.8%. In 2020, the metric fell from 229,000 in the fourth quarter of 2019 to a low of 136,000 in the second quarter of 2020, or 40% drop. The silver-gold ratio measures how many ounces of silver value is in each ounce of gold. In 2008 and 2020, the ratio hit peaks, but the high in 2020 was far more dramatic than a dozen years earlier. So you can see that the same things are happening, just on more dramatic, much larger levels. The quarterly chart shows that the silver-to-gold ratio hit a high of 77-1 in 2008. The price relationship between the two precious metals was far high, and a record level on the long-term chart was 108 in the second quarter of 2020. The daily chart of June divided by July silver COMEX shows the relationship rose to a record of 124 in March when silver moved below the $12 per ounce level. The price action in the silver market in 2020 looks a lot like it did back in 2008. A crisis. Will history repeat itself? And the low of 2008 led to 9 consecutive quarterly gains. The tidal wave of liquidity in 2008 lifted the price of gold from a low of $681 to its record high of $1,920 in 2011. So we had $50 silver in 2011. We also had nearly $2,000 gold. The price moved steadily higher from the 2008 bottom. Silver's move was even more dramatic. While gold moved over 2.8 times higher, silver appreciated by 59 times, reaching a peak of $49 in 2011. Gold rallied in 12 consecutive quarters from 2008 through 2011, and silver experienced 9 straight quarters of gains. Time will tell if history repeats itself, but the odds are in favor of a significant rally in both precious metals. Yogi Berra, the Hall of Fame New York Yankee, once said, "The future ain't what it used to be." So far, Yogi's armchair philosophy seems to be panning out in the silver market, frustrating bullish like me. However, there are too many similarities between the price action in 2008 and 2020 to give up hope for a substantial rally in the silver market. So as we found out in March, silver can be very volatile and unforgiving metal for those caught on the wrong side of the market. When the silver futures market decides to make a move, it can be swift and brutal. The latest example came on the downside, which likely caused more than a few market participants to swear off any future risk position. The pain of losses can cause changes in behavior. I continue to believe silver's best days are ahead. Yogi also said, "Deja vu all over again." And that is what I'm counting on for the silver market. The most direct route for a risk position in silver market is via the physical market for bars and coins in the futures trade, or the futures that trade on COMEX division of the CME. For those looking to magnify the price action of futures, the velocity shares is a bearish counterpart, provide an alternative. So you can see that they're extremely bullish on silver, right? They're extremely bullish on silver. And he mentions many different things. And I definitely think that 2008 was a glimpse of what we're going to see, but just on a much larger scale. If we're talking about $50 silver in 2011, we have to be talking about $100 silver in the next coming years. Now, a lot of people are looking at the short term, but I beg you to look at the bigger picture in the long term. You shouldn't be planning on selling your silver anytime soon anyways. If you really want to get the true potential, the true profits that's going to be life-changing, you got to wait. And patience is a virtue in this situation. Patience is going to pay off. You don't want to sell yourself short in these markets, and that's really what a lot of people I feel are going to do. If silver hits the $20 level, there's going to be a lot of sellers, and I feel like that's extremely cheap for silver. You know, the last time we saw $20 silver was in July 2016, but I definitely think that silver has much more potential than $21 that it hit in July. So anyways, I'm going to wrap this video up here. If you enjoyed this video, if you thought it was educational, informational, or at least just entertaining, make sure to smash that like button. Let's see if this video can get 150 likes. I appreciate you tuning into this video, especially if you stuck around this far along in the video. I appreciate the heck out of you. Thank you so much for supporting the channel. Liking the video definitely helps the most. The link to this article from Seeking Alpha will be in the description. I definitely think there's a huge pattern that's arising from 2008 here. So what do you think? I would love to hear your thoughts, your comments, your concerns, your opinions. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.